All right, good evening, everyone. This is Joe Henches with Beyond the Chart, and this is stock market analysis for today. Today is Tuesday, May 20th, 2014. The Dow was down 137 points and was down a little bit more than that at its low. I think the big thing here, we've got it on the screen. It closed below this trend line, which is the lower edge of this rising wedge that I've talked about, or ending diagonal is another way of putting it. Both the same thing in my mind. So what are we seeing here? We got to close below the trend line, which is negative. We got to close below the 55-day moving average for the first time since May 11th. Today is the lowest close of the last 17 days. Okay, the previous lowest close was back over here on April 25th, so about 3.5 weeks. So it's pretty negative. We're continuing to get the follow through, and the key is going to be, do we continue to get this breakdown, and of course getting lower lows and lower, taking out this next point. I mean, this is going to be the next target naturally, where this got support. Of course, the 233 is right down here. So it's looking like this is coming to play out, and we'll have to see if it continues or not. That's the game plan I'm going with. This one on the S&P 500, not quite as negative as the Dow is showing, but it's interesting. We got this pullback to this trend line in here, and then we've rolled over since then from this highly compressed day. And then we got these last 2 days were like a little bear flag, it's a little more pronounced when you look back at the Dow. A little bit of a bear flag in here, okay? And I'm sure it shows up even better if you're looking on an hourly chart or something to that degree. The New York Composite, similar type thing. We're not below the 55 on the New York, but we're right at the trend line here on the New York. And again, this is a trend line going back, so about what, 3.5 months? February, March, April, May. Yeah, 3.5 months on all the indices. So this is fairly critical for short term in here. Let's see, what else is this showing? I think that's about it. Those are all going to be similar. Let's take a look at the NASDAQ. Okay, this is a similar picture. I haven't changed it. This is what I've been talking about as potential top. We was looking a little iffy after we had this move yesterday. Well, it's come back right down below and closed below the 10 again. So, we're hanging in here. We need to get break below this trend line. So that's what I'm looking for. Russell 2000, a little more negative than the NASDAQ. It closed below the low of yesterday. I don't think the NASDAQ did. I didn't really look at that. No, it didn't. I mean, it was an inside day today on the NASDAQ. Actually, the high and low was between the high and low of yesterday. And we kind of closed right in the middle, but the Russell's a little more negative. So, again, this is this point that's equal to this point here. So still downtrending, still negative. It has not been able to turn up. Okay, the next thing was take a look at some of the indicators. Short-term trading index is starting to inch up for the first time in quite a while. The 10-day is at 1.187, so 1.19, let's call it. We got a closing reading on the index of 2.04. So there's just been a couple of times where we've had that here. Let me blow it up. It's a little more obvious. Here, have been above 2. Okay, in terms of negativeness. Now, typically, I like to see a cluster of 2 or 3, and for a potential a bottom is when you get this extreme, you get the blue line up and above, like right in here, right at the end of January, early February. When was this day? That was February 3rd, and that turned out to be the bottom. Okay, the next one is the VIX. The VIX didn't bounce as much as I thought it was going to. It's actually still in this little cluster in terms of this bounce. 13, it got as high as 13 something. What is that, 13.3? So really didn't, with the negativity in terms of the move to the downside, I would have thought the VIX would have taken out this peak here. So we'll see if we continue to get some more follow through. So we're not even close to being up here in these ranges. Like, I mean, look where we were at the end of January with that sell-off, high at 21.48. So we've got a long way to go before we're there. All right, high-low index. Don't think it's showing a whole lot more. It's just sideways action. We're just kind of stuck in here. We thought maybe we're getting some potential breakdowns, but it hasn't happened. So it's continuing to move sideways. Okay, those are the three indicators I like to look at. In terms of the breadth today, the New York 2.4 stocks down for every one up. And the volume, though, was 4.1 shares down for every one share up in terms of volume. The NASDAQ was about equal at 3.3 to 1 in terms of shares, number of shares, and volume to the downside. So fairly solid down day, but not in the huge 7 to 1, 8 to 1, 10 to 1 type thing for dramatic breaks. So we'll have to wait and see if we start to get some of those kind of days. All right, the next thing we're going to look at 4 bank stocks today, financial type stocks. Well, actually, they're all Goldman Sachs, an investment banker type thing, and then Bank of America, Citicorp. I still keep calling them Citicorp. I don't think they go by Citigroup. All right, we're going to look at Bank of America first. Pretty solid downtrend. This was the break right in here where they had some really negative news in terms of some things that were going on and surprise results that they found. I think that had been overlooked or something. I can't remember exactly what it was, but pretty solid downtrend. Doesn't look like, I don't see anything to jump in on at this point to go to the downside, and don't see anything as saying it's getting ready to go to the upside. Let's take a look. Maybe a little bit of divergence coming in, but again, I tell you, in these downdrafts, you got to be careful with the divergence. I know I like to see that. I mean, you're going to want to see that before it starts to turn. You'd like to see that kind of activity come in. All right, Citigroup, similar type thing. It's just trending to the downside. I mean, it almost looks a little bit. Here's what I'm seeing. And I don't know if this is really it or not, but if you look at this from almost looks like a little bit of wedge action. And that's interesting that that's doing that, because I'm seeing a little wedge, not as big as this. This is a pretty big wedge. So I'm not sure if this is truly a true scenario in here or not. You're getting a little bit of divergence in terms of DI minus. You're getting, but you really haven't even gotten oversold. I mean, look at the RSI. In terms of any selling, it hasn't gotten below 30. So the best, and I'm not trading options on Citigroup or JP Morgan or Bank of America. They just don't move around enough for me in terms of having a beta. A high beta is what we want to see. And JP Morgan's the next one. This is the wedge I had, a little wedge. This is more like a true, like an ending diagonal wedge type thing. Now, I'm a little concerned given the way all the financials are acting. I mean, this could end up turning and dropping right on down, and this turns into a channel. You get another line that's parallel to this one instead of having this wedge. So, I don't know. It's we'll have to see how this plays out. That's the best look I can see right now, but I would not bet on this, is what I'm saying. Okay, the next one is Goldman Sachs. And Goldman Sachs, this looks like a symmetrical triangle congestion in here. Now, the interesting thing about Goldman Sachs, let's step back a little bit. Okay, here's the 233-day moving average. Look how it came right to the 233-day moving average. Okay, it's just right at it. And then a little bit below it, broke down through it, and all this congestion's below the 233. And now you get the 55 breaking below the 233. So, and this trend line, this is a trend line from June. So we're talking, what is that? 7 months plus another 4.5. So 11.5, almost an entire year trend line here that has been broken. And now we consolidated in here. And I think this is negative. Actually, I've got a trade idea that I'll be putting the details on the Trade Ideas webpage this evening about a trade to be looking to get into with puts tomorrow morning. So that's on Goldman Sachs. And then there were two others I wanted to mention. Let's see, Facebook. Facebook's another one. I think we got a little symmetrical triangle going on, and the way this is acting, I'm looking to get inputs at a specific price in here too. So again, I'll have the details on the Trade Ideas webpage. I think we've had 5 waves up on Facebook, and I think it's got more room to pull down, and I wouldn't be surprised to see it come down to the 233, and especially if the market is into a negative tone and negative action right now. And the last one is Seagate Technologies. Same thing. I'm looking to get into puts in the morning. If the specific target is hit here, I think we've got sideways potential head and shoulders type consolidation pattern. In almost two, this looks like a big descending triangle. Okay, we make it at the semi. I like to have these same colors, whatever you want to call these colors, for patterns that I see, and then use red and green for trend lines, for actual trend lines. So that's the color scheme that I'm trying to go with. Okay, so this looks like a big descending triangle, and right now I would not be surprised. 1, 2, 3, 4, 5 point. If this were to roll right over and break right on down, and if that were to happen, then what we do here is create a parallel line and bring it over here, because that is the start of this triangle right in here, and that would be my projection. And we will make this a dotted line out here, and actually you can extend it right. So this would be my projected move if it were to start breaking down, and I'm looking at puts tomorrow morning, so we'll see if that plays out. So that's it for tonight. That's the stocks. We got out of half the position on C-Trip today. Nice profit. Stayed in the position that we've got on Triple D. Again, I put details in there that I was going to go into calls if it closed higher, but it closed 6 cents higher, and I can't justify getting out of the puts for that. So we're hanging in with that. And see, we got out of Trip yesterday. Lost. Got to stop myself out of that position. Had a little loss, about 30%, I think it was. I'll have to look back at the details. So again, all the information's on the Trade Ideas webpage. And if you haven't subscribed, please subscribe. You'll have access to that. And I'd be extremely grateful if you guys would share the post, send it to your friends. If you're a subscriber, send the email to your friends, or share the post on social media and video on social media. So this has been Joe for Beyond the Chart. Have a great Wednesday, and remember the Fed open market. If you're in the market in the middle of the day, 1 o'clock tomorrow Central Time, the Fed releases their minutes, the FOMC minutes, and that's always a little bit of a market mover. So it's something to be aware of. Tomorrow afternoon, that will be a big market. So, all right, have a great Wednesday. We'll talk to you again tomorrow night.